All right.
Let's
Welcome
go.
back. Welcome back, everybody. Here we go. MicroStrategy True North, episode 5. Another big day. You can call it a big day. It's a big day. Another big day with MicroStrategy stock. We've got Bitcoin trading over $90,000. Holy moly. We're having fun. We're having a lot of fun. We're getting on airplanes. We're talking to people. And yeah, we're having a good time. We're having a really good time. So appreciate everybody that's on the stream. Let's see. Let's make sure that we got the chat going. We got the chat cooking. Thank you for everybody chiming in on the chat. We'll try to monitor this as we go. We're really bad at that, but we'll give it a run. So we've got myself, Neithu, Dan, and Grain of Salt on the call. I think we'll have Ben join in a little bit. Everybody's got things that they're cooking on, so we'll have a couple people more join throughout the call. The agenda for today: we're going to talk through MicroStrategy tourists. Welcome, tourists. Welcome to the volatility. Here we go. If you didn't get enough volatility with Bitcoin, welcome to MicroStrategy. We're going to jump into catalysts. Then we're going to talk about a little bit about volatility. We'll talk about this ATM a little bit, what's going on with convertible debt. We'll talk maybe about the options market and what we're seeing, what Grain of Salt's up to. We'll talk about what Chris is up to. And then we'll talk about the future horizon and what we're thinking about, and we'll go from there. So I will start with the price. Let's start there. Boom. MicroStrategy price. Here we go. Okay. MicroStrategy ended the day at $328 in after hours, up to $337. We got Bitcoin trading at $90,000. Welcome. Before this week, MicroStrategy had not traded over $300. So if you're freaking out right now, you're either over leveraged or you haven't been paying attention long enough. All right. Everybody on Monday, when the price of the stock went over 300, everybody's brains were blown out. We've got, a lot of things are happening. We think there's probably ATM going on. We've got some convertible debt potentially in the background. We could talk through that. And we've got new people coming to the scene. We got ETFs rebalancing. You could think about all of the other Bitcoin proxies had a bit of a tough day as well. So some interesting correlation in all of the other Bitcoin proxies. And yeah, so a lot going on there. But I haven't flinched. I know everybody on this call hasn't flinched. We've been used to this volatility. And I'll tell you, it was even crazier. There was a point in time, you guys may remember, when the Bitcoin ETF came out, and the price of MicroStrategy actually fell in half. It went from, I don't know, like $700 down to about $350. So it fell in half within 2 weeks. And I held through that entire period. And I know everybody on this screen has held through that entire period as well. So when we see a day like today, after it's been up massively the entire week, I'm not even flinching. This doesn't even, it doesn't make a difference. We're talking about a company that is worth $70 billion today. And we think it's possibly going to $1 trillion or $1 trillion plus, maybe 3 trillion, 5 trillion, 10 trillion at some point in the future. Right. And personally, for me, when I start looking at the stock and how it's trading from a market cap perspective, I almost think of it as if the stock itself is effectively trading as if it's already a $500 billion company or a $750 billion company, just because of the volatility associated with it. And I want to put this into perspective a little bit. NVIDIA went down 1.36% today. The market cap that NVIDIA lost today was $71 billion. NVIDIA lost an entire MicroStrategy in market cap today, and it was only down 1.3%. So I think it's helpful to start thinking about these numbers and the relativities of the scale here, where you look at the price of MicroStrategy and it's down $4 billion. If you zoom out and you think of the grand scheme of things, right, it's nothing. When MicroStrategy is trading at $1 trillion, it will be moving 25 billion in market cap a day. It may be moving a third of the entire market cap that it's trading at today. So I think it's going to get crazier. I think it's going to get much, much, much crazier. And why do I think it's getting crazier? Because of our catalysts. So we've got a lot of catalysts on the horizon, right? We've gotten through the election, gotten through the November Fed meeting. The November Fed meeting cut interest rates another 25 basis points. So another bullish indicator for risk on assets. We've got Michael Saylor going on CNBC tomorrow after close. I think it's going to be 4 p.m. Eastern. I'm going to be tuning in. I think everybody's going to try to be tuning in on that, see what he has to talk about. I suspect there may be something that he's interested in talking about, maybe the convertible debt, maybe a potential issuance, maybe what they're doing with the ATM, maybe the $42 billion capital plan. This will be the first time that Saylor is going on live onto the news to talk about the $42 billion capital plan. So it could be an incredibly illuminating news interview that hits a large swath of the capital market. So will be really interesting to see how that plays out. We've got the November 15th open interest option expiration. So another big day coming up on Friday. I know a lot of people had $300 calls. If you held on to them, Godspeed. It's a big expiration date upcoming on Friday. I mean, we've got 2 more trading days, so we'll see how that goes. MSTR quarterly review and rebalance. That happens on November 26th. So that is coming up. I think the last quarter review the market cap of MicroStrategy was trading at like $30 billion or maybe $40 billion. So the rebalance may equate to almost a doubling of the proportion of MSCI total world index future dollars. So just something to keep your eye on. Thanksgiving, we know a lot of orange pills are distributed at Thanksgiving, especially if the price of Bitcoin is in price discovery and it's just totally ripping, right? Everybody's going to be shoving their face full of pumpkin pie and talking about orange coin. QQQ rank day, November 29th. So we've got what is that? 16 days. I think it's 11 trading days until QQQ rank day. So I suspect we're going to be seeing a lot of volatility leading up to QQQ rank day, and a lot can happen in 11 days. Just to put it into perspective, again, I think the price of MicroStrategy stock at one point in the last bull cycle, I think within 14 trading days, it like quadrupled market cap. Earlier this year, I think within 14 trading days back in March, it tripled or quadrupled market cap. So a lot can happen in a very short period of time, and we've already seen that happen this week, especially if the price of Bitcoin continues to rip. And who knows? Maybe Saylor's got another $1 billion of cash on hand, ready to pump this baby to $100,000 so he could throw his yacht party for 100K Bitcoin. We'll see.
Now, Jeff.
Yeah, go ahead.
We think that maybe the S&P 500 isn't priced in because it may be flying under the radar, but do all the institutions know they're getting into the QQQ? It's like this is just expected, and maybe this is priced in.
Yeah. So the concept of priced in is a funny concept, right? Priced in is like front run. The question is
Right.
it front run?
Exactly.
I think it's possibly being front run right now. Again, you got to think about opportunity cost of capital, and if people are front running this, generally stocks when they're front run, they get sold to the passive index flows, and then the opportunity cost of capital changes, and you go throw that capital somewhere else. In this circumstance, I think the game theory points towards there being no better place for your opportunity, your capital at the moment. So they may not be selling to the passive flows when they show up. I mean, me personally, like looking at the rest of this list, I'm not selling to the passive flows at that point. So
I feel like anyone with a like relative understanding of the Bitcoin cycles isn't going to take that risk. You're staring down the most bullish period of like a 4-year block. You're going to sell your MicroStrategy with passive flows coming in. Like you have to be insane.
Yeah. And if the United States government is on the bid for 1 million Bitcoin and initiating this game theory,
what are you doing? Like you're gonna try to sell the local peak There won't be any local peaks. There's no local peaks. There's a peak that gets run into another peak, and then it keeps going. Like anyone who's been doing this for the past 3 months, like knows what's been going on. Like it was a little scary in September when like Bitcoin was trading sideways and MSTR was down. But anyone who bought calls then is just printed over the last 3 months relentlessly. So I think that'll continue to happen.
Yeah. Yeah, go ahead.
The calls are kind of expensive now.
Calls are expensive. And it kind of seems like they were repriced. And maybe we'll get to that. And we can talk to Grain as well. I know he's been in the options market. He's just shopping. He's just throwing them all in his shopping cart, just ready to
Black Friday for options.
Black Friday. So yeah, I mean, obviously a lot on the horizon. We've got the December Fed meeting, potentially another interest rate cut, QQQ addition and deletion announcement. So we'll know for sure, Nithu, and on December 13th. And then we've got the historic option expiration on January 17th. I know Ryan just posted about this. We got some call skew. Basically, there are a ton of options that are in the money, and it's my thesis that I think there's a large cohort of retail traders that are going to potentially exercise their option or their right to buy the shares. And I don't think that Wall Street is 100% completely hedged for that probability. And that could be changing over time with how many options they've been selling over the last couple of months. But yeah, it's tough to say. That's a difficult one to tease out. It's almost impossible to analyze. I mean, you don't know. None of that is really public information on how hedged these companies are. So yeah, I mean, a lot of exciting things on the horizon. I'm incredibly bullish about the future. All of these catalysts are in front of us, right? There will be volatility, absolutely. There will be volatility in Bitcoin, absolutely. But yeah, it's an exciting time to be in this trade, and yeah, I look forward to seeing where we go with this. So the other thing I want to talk about is market cap. And this concept of market cap is interesting. So if you go back and you look at where MicroStrategy was trading at the beginning of 2024 or after the ETFs came out, I mean, MicroStrategy was at $7.8 billion market cap, and we're now at roughly a $70 billion market cap. So significant increase over time in market cap. And yeah, we've got a long way to go. And I think if you look at how this thing has been trading, it's down $4 billion today. They're $2 to $4 billion today. I think that's more akin to a company that's a $250 billion or $500 billion company, and not a company that's $70 billion. Just thinking about relativity and how other markets are trading. So I'm going to stop there. I know we've got Ben on the call. Ben, good to see you.
Happy to be here, boys.
Happy to be here. Here we True North, episode 5. So yeah, and from there, it's really kind of open chat. I think, maybe we'll take this for an hour and a half, and we'll see where we go. I know a lot of people are. There's a lot of new people in the MicroStrategy sphere within the last 2 weeks, and a lot of people. The commentary has been pretty funny. It's pretty funny seeing the same themes over and over. As we're seeing the same themes, same things that happened in March of this last year, where the price of MicroStrategy just totally ran up and almost hit 2,000, split adjusted to 200. And then it ran back down, and many people freaked out and they had no idea what was going on, and hadn't done a lot of the work to understand the conviction and understand the trade. So, and understand what was going on with Saylor, like how they were leveraging capital and using the capital markets, using the ATM, thinking about convertible debt, all of these things. So, one thing I will point out that I think is particularly interesting is when Saylor announced that they just bought more Bitcoin the other day, they sold $2 billion of shares in 10 days after Halloween. From like October 30th to November 10th, they sold $2 billion of shares and the price went up. They used the rest of the $900 million of the ATM that they had from the one that they had filed in August. And then they started using the $21 billion ATM offering that they just filed here after the most recent earnings call in Q3. So incredible stuff. I think, yeah, I mean, there's a lot going on. Anybody have some thoughts? Want to share screens or talk through this? What do we think?
I think the ATM, I found, I don't know what everyone else's feed was doing, and maybe it was just because I posted a few things today, but everyone seemed very confused about the ATM and the ATM usage, right? So when we looked at the last buy that they did, right, they used the 890 million that was left on that ATM. And then they used another, what, $1.1 billion from the new ATM. And I think that surprised a lot of people because they didn't see an S3 get filed. And so typically, if you're going to start up an ATM, you have to have an S3 filing. But when you go back and you look at MicroStrategy's filings, one of the most recent ones, and I'm going to look it up here a second so I can tell you exactly what it's called, but it's basically an automatic approval for the ATMs. So what they filed was actually a 424 B5, which gave the plan for their latest $21 billion ATM. And the automatic approval, which you only get if you're like a known issuer, if you do a lot of ATMs, so they know you, then you can do these automatic approvals. And so the 21 billion became effective when they put that prospectus out there. So they didn't have to go file a new S3. So I think a lot of people were confused when they didn't see a separate S3 filing making the 21 billion available, but the 21 billion became available when that 424 got released. So they've got access to the full $21 billion in the ATM. And the thing that I've seen going around a lot is everybody's trying to decide, are they using the ATM today? Aren't they using the ATM today?
Who cares?
Well, here's the thing. They're using it almost every day, right? Almost every day. You get the pause periods around earnings where they can't use it. So you'll get those. But the reality is they're using it every day. Your only question is how much are they using it? And we'll never know the answer to that. They're not going to tell us. But it's probably a very small percentage of the overall volume. But when you look at the volume that we had just over the last couple of days, I mean, when you've got $40 billion a day of volume going, or yeah, something like that. I can't remember what the numbers are. I'm just making them up right now. But it was a lot. Take my word on that. There was a lot of volume. Got plenty of numbers, guys, here. Someone probably knows. But so they're probably selling more on those days, right? On those days, there's a chance that they might be selling $1 billion worth, right? And that would still be a very small percentage. So I was half joking before when I posted, and he'll probably be done with the $21 billion ATM by the end of November, but I'm not so sure I'm joking anymore. Like, if this volume,
it's possible.
If this volume keeps up and Bitcoin keeps doing what Bitcoin's doing, and good luck making sense of that, other than you've got a new player in the market who doesn't care what the price is. If that keeps happening, he's going to rip through this thing. I mean, that 21 billion will be done. And with all these notes in the queue to convert right now, or to be able to convert right now, like, there's a serious chance where he gets the entire 21 billion. I'll be more conservative. I'll say December. By the end of December, there's a real chance where he rips through this $21 billion ATM, right? So he's got all the equity. He goes out, he buys $21 billion worth of Bitcoin, which pours gas on the fire that's happening with Bitcoin right now. And then because of two things, because one, he's now created more room on the balance sheet for debt, right? Because remember, they'll borrow 25% of the fair market value of their Bitcoin. So when he adds 21 billion to that, you can do the math. What's 25% of 21 billion, right? So getting that next 5 billion in converts is a layup. I mean, he's going to have no problem at all doing that, even if nothing converts. It's not going to matter because he's already created the space on the balance sheet to do it right now, or when he's done with
when they're all converted. When they're all converted. Yeah.
So people look at the plan like it's so ambitious, and he's just going to tear through it like it was hardly a road bump, right? Well, I mean, that's such a blistering pace that we might see here while he races to probably do this before we get more of this nation state FOMO happening.
Yeah.
Because he understands the cycles, right? Or like he's probably thinking about that in his head. Better to do it now as opposed to later.
Well, and think about this, right? If you're one of the biggest names in Bitcoin, do you think if a nation state was looking at this, that guy probably doesn't get a call while they're trying to learn about Bitcoin? Right? Like he's kind of the go-to out there for people that want to look at the value
that's
of
a
Bitcoin.
really good point.
So
oh my God,
he might, and I'm totally speculating here, right? It's not like I know. I'm just down here in my dark dungeon thinking things, right? But he's probably looking at this going, if this whole U.S. strategic reserve is real, if that's going to happen, and even if it's not, let's say that you assume it's not going to happen, it's going to get forced at some point, because you're not going to get BRICS going out and accumulating Bitcoin and telling the world they're going to settle trade amongst themselves in Bitcoin so they don't have to hold all these different currencies, right? If you're the U.S. and you want to maintain your economic standing on the global stage, you have to buy a proportionate amount of Bitcoin to make up what you've made up in economic power on the world stage today, right? You have to have a proportionate amount of Bitcoin to protect that standing if the largest nations who aren't particularly fond of you say, hey, we're sick of using your dollar, we're going to try using this other thing. Just as a defensive move, you have to buy a ton of it, right? So if Saylor's looking at that and he's going, well, I've got $21 billion ATM and 21 billion in converts, maybe I can get rid of this 42 billion before we even get to that phase, so I can get a $210 billion ATM and $210 billion in converts ready to use while nations are buying.
Yeah.
Right. I mean, that's the type of stuff you're probably looking at here. So
yeah.
Anyways, long rant, but that's my thought.
Well, imagine if he would have come out and he said, "Hey, I have a $42 billion capital plan, and I plan to use it in the next month." shareholders would freak, right?
Right.
Everybody would freak.
Well, let me chime in here for a second. So Ben, thank you. That was not a rant. That was a stream of consciousness, which will cause me to buy, I don't know, $1 to $2 million more options. And I'll talk about it in a second. But Ben, and look, the people listening here have to just understand what Ben just said. If that is true, and let me tell you something, what I know from the corporate world. If you have half a brain in the corporate world and they tell you to go do something, let's say it takes 6 months to do it. You're going to tell people 1 year. And you do that to set the expectation of under promise, and then you over promise, and you're a hero. And I've gone through my whole career, 24 years, how many people are so moronic. Oh, sorry, I'm not allowed to call people bad words. But they're like, oh, 6 months. Hey, you can do 6 months. Let's try to do it in 3. And it's like, it can't be done that way. So what you do is you say, look, we'll do it in 6 months. Sorry, we'll do it in a year. And then you, knowing that you have a shot of doing it in 6 months, so you set the expectation, oh, it's going to take 3 years to do 42 billion. And then you just front run yourself. And you then go this way, and then you go back and tell people, see, we weren't late. We were actually ahead of schedule. And I don't know why people that are 50, 60 years old they don't get that simple concept in life. So, Ben, I believe everything that you said. I think that you believe everything you said because you said it. Right?
Yeah. Well,
okay.
I mean, if you think about the QQQ possibility, and I bring this up a lot because this is huge. This is potentially huge, right? And if you're thinking about $800 million of buy side volume, that's not 1-to-1, right? Like that's not 800. Like that $800 million may translate into 100 billion plus of market cap. So if you know this is coming at some point, you can set up sell orders like throughout the chain, and you could raise $5 billion, $10 billion of capital, and not even, you wouldn't even see it. It wouldn't even be a road bump, right? Like a speed bump.
So if I'm Saylor right now, right? Well, 2 things. One, I would just like to ask the 1x MNAV people, what's the value of him doubling the size of the Bitcoin holding in 2 months, right? Does that do anything for creating value in your mind? But anyways, for the inclusions, I've been thinking about that a little bit, right? And I'm not so sure that the inclusions themselves are actually going to kick off some big price run on the stock. If I was Saylor right now and I'm really trying to unload this ATM clip, I'm going to take advantage of that buy at any price liquidity in the market for my shares, and I'm going to start offloading shares on the backs when I know the time period where they're buying. That's what I'd be doing, right? If I was looking at this going, if I think the nation state thing's happening, I don't particularly care what the price is doing right now, because if I can unload the entire 21 billion and say he just pauses for a month, he just focuses on converts until we're through the changeover in administrations and we get the chance to see what type of new legislation actually passes through and what it says, right? Say he just takes his foot off the ATM gas because he's done, right? He's done with the 21 billion. So now he's going to focus on getting the 21 billion in converts out, which are not affecting the day-to-day trading price on the shares. It'll affect it in the very short term when they're issued because the shorts will get put on. But after that, right, now he's taken this huge sell pressure out of the market. And now you wait and see what the front running looks like. And then the next batch, when you load up a huge ATM down the line, and now nation states are all piling in trying to get it before the US. Or, the way I've kind of framed it in my mind is you hear a lot of talk about, like wealth redistribution, right? We hear it in the US all the time. But this is essentially a chance for wealth redistribution across the globe, like for countries to change their economic standing in the world. If you front run this next currency that's going to be used for global trade, you might be able to actually change where you stand economically in the world if you can settle trade with this. So if you buy it before a country like the US takes all their economic power, dives into this thing and starts buying all this Bitcoin, if you buy it first, like a country like El Salvador has been doing, it skyrockets the amount of capital you have available for global trade. Right? I mean, it just absolutely shoots you up the ranks. So if I was one of these countries that doesn't have my own currency to print to buy this stuff, I'd be buying it as quickly as I can. If I'm one of these currencies that's pegged to the US dollar, I'm buying as quick as I can, because if I'm looking at BRICS and all those countries and going, they're going to lessen the impact of the US dollar in the world, which will impact in turn my purchasing power out here.
Oh my God.
I got to shift to the next thing first, right? Before the US runs the price way up. Because if I can't print my own currency, then I do have to care what price I buy at. So right now, if you're one of those buyers that has to care about the price, which the US isn't one of them, if they print the US dollar, they don't care what US dollar price they pay. It doesn't matter because they make it. It's fine. But if you're one of these other countries that gave up your own fiat currency and just either pegged it to the US dollar, or you moved and just used somebody else's currency, right? A lot of countries just use the US dollar itself. If you're in that scenario, you've got to buy early. So I think you get some of those countries looking at this going, if this is even a little bit of a risk, we do have limited capital to deploy here, and we might want to do that early before this price really runs away from us. So if I'm Sailor, I'm taking advantage of this short-term run up that we have before the US gets involved. I'm using my $21 billion ATM. I'm going to start getting converts out the door. I'm going to get as much Bitcoin as I can before that. Then I'm going to take my foot off the gas on the ATM for a while, and I'm going to let the price breathe, right? Because when you get mania from nation states coming, the multiple to the book value of the Bitcoin is going to expand massive, and he might be hitting the ATM at a 25 or a 30 times MNAV, right? How accretive is that? Very, right? Very accretive.
And doesn't that speak to your point, Ben, too, of like with a higher both MNAV and Bitcoin price, those convertible bonds are even more accretive since the strike price is effectively higher.
They might convert the very next quarter, right? I mean, those things could really, a run up of 130% of conversion price if you've got nation state mania is a layup, right? You can get rid of all of them in the next quarter. So yeah, I think that's a real possibility. Now, I don't know, is it going to expand that much and get to 2030? Obviously, that's, dramatic effect, but I'm not ruling it out. We've seen manias before, right? When people start panicking and start jumping in and buying at whatever price they can get it because they're thinking they're missing a generational opportunity, things get nutty for a while. And if you're Sailor, you sit back and just get ready to take advantage of it.
Let me just chime in here. Look, folks, when Ben is talking, I'm going to give you folks a pro tip here, okay? He says this like nation states, game theory, Dan throws in, it's more accretive as the market cap goes up relative to, when these guys say this, it's like, and they're like, holy crap, I'm sitting here like thinking, if it ain't bolted down, I'm selling it to go buy more options. Good thing I have more money to go do that. But guys, when these guys say this stuff, it's like gem after gem, and you're like, oh, okay. This is some really important stuff that they're saying. And I listen to these guys. I'm like, this is some really great stuff. And by the way, when you guys start off with this 1-to-1 MNAV, just even giving those people any form of
1x
credibility.
MNAV Bears. The Bears.
And there were some other people that every once in a while DM me this thing, and I'm like, do not waste time with them. They don't even know that they're that mediocre. I don't even know how to say that. It's like you just gotta focus on the people that make you money. If the 1-to-1 MNAV people were making you money, then go follow them. Okay? But I believe what these guys are saying, and I think they believe what they're saying, so I think we're all on the same path.
I prefer IBIT, actually. I prefer bang in expense ratio for underperformance, actually. Thanks, Grain.
Can I tell you guys an interesting metric while you're talking about all these?
Yeah.
So look, you guys, when there's a price to earnings per share, it then has some multiple, and it could be on a high flying stock. It allows you to compare two different stocks of two different market caps by comparing that multiple. And you can compare them in the same industry, and it makes sense. In different industries, trade at different multiples. Everybody knows this, right? What I can tell you is that I bought $700 strikes yesterday, right? Yesterday. They are still up 11% today. How is that mathematically possible? Think about this. Now, let me give some more background information. Early in the day to the daily close, right? And they finished positive green, okay, 10%. So I had in my account, I had an $8 million swing today, right? And obviously it was down negative 8 million, but the $700 strikes I bought were positive 10.88%. And I could post this if anybody doesn't believe me. And I'm like, how is it that I bought $700 strikes? The stock drops, I don't know what, $50. Somebody said $50 from peak price to lower price today to closing. And yet my $700 strikes are now positive. That means that they were mispriced. They were repriced because they were mispriced. Because I believe that these algorithms, so I think that had to be a manual adjustment that somebody had to do for the algorithm. But I don't know. I just look at what is my account going up by a positive gain? And I love these calls, but is the account going positive?
Didn't they raise the IV on these though? Isn't that part of it, right? Like they kind of repriced the options. They adjusted the IVs higher. I think that might be part of it, but I'm just Dan might know. He looks at it more than I do.
I heard that. So is that true? So let's assume that's true. So I just look at the total gains. It's like, and by the way, Tad had mentioned, I could calculate the Sharpe ratio. And by the way, I'm a massive fan of Tad. And that's true. Everybody's like, let's talk about the Sharpe ratio. And I'm like, I care about my total returns, not whether or not I have a lower Sharpe ratio per gain in stock. Fuck that. Would you guys rather have a 20% gain, okay, with a lower Sharpe ratio, or would you rather have an 80% gain with a double the Sharpe ratio? And I'm like, I'd rather have an 80% gain and we'll go on that way. That's if you can handle the mental fortitude and the conviction that you made the right call. But that's just me.
So yeah, and I noticed something weird with the options as well today. I was looking at the January 17th, 2025, just looking at the tail, and it definitely got repriced today as well. And I mean, the delta between a $700 call and a $600 call, there's not much difference there. And there used to be a material difference between the strikes as you got further out in the tail. They got kind of cheaper and cheaper as you went. But it seems like the tail is getting priced significantly higher and requires much more capital than it had previously, even with short dated options. And it looks like the 760s for January are going to get released tomorrow.
Ooh, so, So I have a question. I have a question. Should I wait? Should I get to 760s or wait for the 800s?
Yeah, I'm just like gonna be
They're like
on
the 800s
Friday.
aren't
On
even
Friday,
buying.
the other 800s come out Friday.
Grain, you know you're buying both, so just
I'm buying.
go ahead.
My question. Well, I'll take my own advice. What would I do? I do 50% and 50%. But I think these guys are trying to front and run me. And I really look. My competitive advantage is, look. I didn't know what what was that, Ben? A 424? You just said.
Yeah, the form. Yeah, 424 for the automatic shelf registration. Yeah.
Yeah, I love how he just rolls out of his tongue. 424 for the automatic shelf registration. And this was known because that was done previously, so they didn't have to do an S3. I got you correctly there, right?
Yeah, you got it.
I didn't know that until you just said that. So I think what happened is I think these people are trying to front run me. And my only competitive advantage is speed and time to market because I'm not as smart in knowing all this stuff. So for me, speed is my friend. And I've got to get in there and front run them before they front run me. And I don't want to be front run by a nation state because let's be realistic. I might have a lot of money, but every nation state has more money than me. So I got to get in before the other people get in front of me. Hopefully that makes sense, right? Okay.
Yeah, I mean,
Yeah.
if everybody's, if partially, if what we think happens partially happens, I mean, one thing to keep an eye on, guys, for like the big events that are coming up is you've got Bitcoin MENA, right? Middle East conference. There's a real scenario that the
Is that this
buyer
weekend?
right now is, that's like the 9th and 10th of December, I think.
Yeah.
I don't know. Someone could look it up.
I need to add that to my catalyst list.
Yeah. Oh, yeah. Because if that's one of these sovereign wealth funds, there's a chance that there's an announcement there. I don't know, right? I don't have any information on that, but it would seem reasonable that if someone was going to announce, if they're transferring oil money into Bitcoin money because they're looking down the road going, too many things are going electric, the demand for oil is going to go, we want to preserve ourselves, we're going to start converting some of this oil money into Bitcoin. If that's the next digital capital of the globe, why not, right? And some of them are friendly with the BRICS nations, and so it would make sense to me, particularly given the size of the buying that we've seen happen, that maybe it's coming from that region and the hours at which some of that trading was happening would seem to make sense. So pure speculation, but you've got a chance that there's an event that happens there where there's an announcement saying that they got in, right, front running, which can kick things off even earlier. I mean, right now it's all speculative, but when you look at the buying patterns and the time of the day that they're buying and how they're buying, right? Like, there you go, 9th and the 10th. Like, they're not buying in a very controlled manner that someone who was concerned about the price they were buying at buys it, right? If you're doing that, Josh Mandel, he always calls it gentleman traders, right? They use limit orders so that they're not just throwing the market around. But when you start seeing things, 10, 20, 30, 40, 50 Bitcoin market orders, that's not someone who cares about where they get filled. They just want to get filled, right? If you're buying so much, if that's the goal, is just get as much as you can, they don't particularly care what their fill price is.
Yeah.
And that's a weird type of trader. That's not a normal trader because we're all going out there going, all right, if I can get it $1 cheaper than it is now, I get this many more sats, right? Like, that's a retail or an investment firm that's trying to maximize return. If you're just trying to be first, you're just buying, right? Your only number is how many Bitcoin do I have? And if you're a country that's using your own currency to buy them, you just don't care less what you're spending to get them. You just need to get them first. That's the whole game here. So whether that's happening or not, I don't know, right? And Tim's not here, so not financial advice. Everyone needs to know.
Oh yeah,
that.
we need to say that at the very beginning.
I'm recording now.
Yeah,
I'm recording.
wow.
If I rant like a lunatic for a while here, it's not financial advice.
None of this was financial advice. All that shit we said.
That's right.
While it is interesting,
those words only exist from this point forward. So everyone heard it. You're all on here. We've got you in chat. We know. But if that stuff's happening, right, and then you get one of these conferences, which tends to be where a lot of news comes out, you could have it. That wouldn't surprise me in the least to see something like that. And in those nations, you might even get more coordinated buying than just a single nation buying. So again, I don't know. I don't have any information on that. I'm making all this up, all my strategies. I just like to think about that stuff. How would I do it if I was Sailor or I was some other company running the strategy? How would I try to execute my strategy to take advantage of these events, right? And that's just where my mind goes to recently. So So we'll see what comes out, but it's not going to take much to kick off a serious rally that we just saw.
So, okay, so look, I'll do some simple math here. So I bought this 700 strikes at $18, and now the 720 strikes are $19.56, say $20. There's a $2 difference. $2 on a contract is $200. I don't know. I think it's still mispriced. By the way, if there's any market maker, Citadel, Jane Street listening in on this call, I get it. You're hearing the inside information on this.
Yeah.
You know what? I think maybe I got to go bigger. Maybe I just, instead of splitting 50, this is not financial advice. Do not copy my trades. But
People
maybe
have
instead
often accused you of not going very big on this trade.
I know. I don't.
You're just dipping your toe.
But think about it.
Like, I don't know what you're scared of, but you're
Right.
just
Right.
slowly into it. Dan's
right.
trying to control you over here.
He's trying to limit me. And
I don't
think
get why
about
you're
this.
so bearish.
I'm like, Greg, what do you think about the 650s?
650s. Well,
No.
look, there's no price difference between the 650s and the 720s.
That's what I'm saying.
No, exactly. I think the high
It's
one.
23 versus $20. You're talking what?
Yeah.
15%? Is my math right? I think so. Yeah, 15%. Why
For
would
a
I
huge
care
market
about?
cap difference? Yeah.
Right. Well, then you're like, well, I might as well just go buy all the in the money ones, and you only have a 2x return. I mean, let's just look at sheer logic with this. If there's a 15% difference on the upside, Dan, are you capable of calculating the difference in the rate of increase? I don't know. Is that whether that's Gamma or Vega, whatever it is, right? The rate of increase that we have versus buying the 600s, or the 650s at $23 versus $20 for the 720s, right? I think that the rate of increase buying those is so much greater. It offsets any 15% reduction in price up front. Did that make sense? I think it makes sense in
Yeah,
my
that makes
head.
sense. I'm pretty sure that's a combination of Vega and Gamma. Do you guys want to pull up an options chart and just maybe talk through that? Maybe we can talk about the Jan 17th catalyst.
Well, I mean, I'm not trying to derail the call. I think Ryan posted all this information about Vega and Gamma and price per Vega and duration versus. Look, it was great what he wrote. My thought process, one other guy commented on it. I don't remember his name. And he's like, oh, I think you're wrong on it. Well, first of all, only one guy was smart enough to even have a prayer of answering or to refute what he was saying. The guy's got 200 followers. And my response to him was, cool, how much you buying? Crickets. So my takeaway is I believe that people should be judged by their results. And the same thing with looking at any investment. And that's why when you showed that bar chart that Saylor did from his Q3 report, it's outpaced everything. So I don't know why people don't get this. I mean, if their track record is that great, you know what I think is going on? Their track record is so awesome and this is going so well. Then people become skeptical and they're like, it can't be real. Therefore, I will not, analysis paralysis. I won't buy any because it can't be real. And that's the problem. To them, it seems that. And so I do want to go off on a tangent for a quick second here. In the group that I'm in, I have this private group. And, you know, in the last cycle, because we've had these calls going now for 4+ years, we had something called a Lambo Day. And a Lambo Day was, because we're all dudes, right? And we all like fast cars. So a Lambo Day is that when your total portfolio goes up by more than 300,000 in a day. And then obviously what happened in the last cycle is like, what happens when it goes up by 600,000 in one day? It's like, well, we weren't smart enough to figure that out. So we just said it's a 2x Lambo Day. And then we were like, well, what happens when you break more than $1 million in a day? And they're like, well, it's a triple Lambo Day. And then we're just like, oh, fuck it. It's just $1 million, whatever it is, it is. So we have like, you know, this cycle has been even crazier. And so as soon as we say that to a regular person, they're like, what do you mean you made that much money in one day? And it's like, you know, I kind of didn't want to tell you. And we would only tell this to somebody that's already a multimillionaire. But at that point, we're like, oh, I wish I didn't tell them. So because they just can't understand this. And so what this call is awesome. Ben, thank you. Dan, thank you. You know, the rest of Jeff, keep on going. Yeah. I'm done derailing the call.
Yeah, no, he's popping his Diet Cokes as we go. No, thanks, Grain. I appreciate it. And Dan, why don't you pull up your screen? Actually, no, I think I have control of that. Just to put it in perspective, right? A $700 price is that 2x from here? That's 2x. That's about 2x from here from today, which is
here's some perspective on the options pricing right now. And we talked about this a little bit yesterday, right? But like right now I'm on looking at the June 20 expirations. And so, we don't ever talk about selling here, but if you were going to sell calls, like say you needed money for something right now, and you were going to sell calls to raise it. If you had 1,000 shares of MicroStrategy, which I know is a lot of shares, but say you had 1,000 shares, you can go all the way out to the end of the chain, which is $760 strikes now. So you would have to sell your shares to someone for $760 if it was beyond that. For that, you could collect $5,800 per contract. So if you had 1,000 shares, you get 10 contracts. That means the premium you'd collect today is $58,100 for the price of MicroStrategy, to more than double from where it's at now by June, right? Like that's pretty crazy. Like you still get a huge gain between now and June, right? I mean, when you're so conditioned to look at the S&P 500 and hope that you get 9% a year, right? Like you're selling a more than 100% out of the money call option by June, which I'm not doing, by the way, because I think this can get way nuttier anyways. But like for a lot of people, this is going to be the ultimate value in owning these shares long term, is that there are ways to access substantial amounts of capital from the value that this volatility brings, right? While they're pricing this volatility higher and higher. Sure. Like
Chris,
those are real opportunities, right? I mean, that's someone goes out and needs a new car. Like you still keep 100 and whatever it is, 115% upside, and you collect $5,800 today. And your worst case scenario is you more than double the money you've got, and then you lose it in 7 months. Like that's pretty crazy. I don't think a lot of people get that yet. But as MicroStrategy price gets higher and higher and higher, if you just hold on to your shares, that number gets bigger and bigger if the volatility stays.
It's
so
insane.
like this is a really desirable stock to just own, because even if you don't need it now, like that option's still going to be there down the road. There's nothing he's done that shows me that volatility is going to die off anytime soon. I mean, look at what he's doing. So that's pretty nuts. So anyways, pass it over to you, Dan.
Well,
I know
in that
Chris
same
is looking at
scenario
over there. Yeah.
And sorry, go ahead, Dan.
Hey, so I got
I want to hand it over to Chris. I want to hear what he has to say about that, because I've run the numbers.
So
go ahead.
I mean, this could come up big time in January because that's the one that Jeff mentioned. It could be historic because there's just so many people that have in the money calls. But if somebody's got November 22nd calls that they bought a year and a half ago, and they're like, I don't know, the 100 strikes or something, they're just ridiculously in the money. Maybe they've got 20 of them, and they're thinking, you know what, I'm going to exercise 5 of them. Well, you got to come up with what, $10,000 per contract. So what, 50 grand? The at the money calls for for the 22nd is $3,000 per. So if you sell 17 covered calls, you have to exit those positions anyway in order to pay for the exercising. So you can sell 17 covered calls. If you had 20 of them, that's 50 grand, and that'll pay to exercise 5 more. So it's
I see what you're saying. So you're saying you can either sell the shares to exercise these calls that you have in the money, or you can just keep your shares, sell a strike for a week out or a couple weeks out, and use that cash to exercise, and that way you have a chance of retaining your shares, and so it's free plus EV.
Yeah, because if you have to sell those calls anyway to pay to exercise the other ones, you have to exit. So you might as well exit and get paid some premium on the way out.
So Dan, I think you missed a point there. He's saying writing covered calls on your deep in the money options.
Oh, yes, that's exactly what
Chris is basically he's talking to me. He's like, Jeff, you have all of these super deep in the money options. Sell cover calls against them and exercise. And if you get called away, you gotta sell a couple anyway. So you might as well.
Yeah, because the main criticism to selling a covered call is limited upside. But if you have a week or two to exit a trade, right? Your expiration date is a week away. Your expiration date is 2 weeks away. You're exiting at basically whatever today's prices are. Yeah. So you sell an at the money covered call, and you exit at today's prices, and you get paid, thousands of dollars per contract.
You're selling a covered call on your option, on your leap, or whatever it is. It's now a long call that's in the money, and you're selling a covered call on it. Oh my gosh. I'm gonna have to think about that for a little while.
It's called a poor man's covered call, and you have to be pretty careful with it. When you can start doing it when an in the money option, when an in the money call is like a 0.7 delta or higher, it starts to act like a synthetic stock, so it qualifies as collateral against a covered call. But when it's 0.7, 0.8 delta, you have to be very careful and probably not be able to sell an at the money strike. You would want to. There's a formula for it. But something that's like 0.9 delta, 0.95 delta, I mean, just so deep in the money, you can practically sell just about anything you want at that point.
So on Robinhood, my covered call says the delta is 1.
Yeah, exactly.
It just says 1.0.
Rounding error. Like, it actually can't be 1, but it's rounded to 1.
It's rounded to 1. Yeah.
It's an exercise in enjoying that 10x number. Like, it's just, you're holding it for the privilege of that. It's no different than the shares. But the point with the covered calls, right, is I know we all talk about holding stuff and never selling it and, yada, yada. But that's not reality for most people, myself included. There's things I'm going to do with some of this money. But when you look at, like, if you go out and sold 2027s right now, like these 760s, January 2027s, if you had 1,000 shares, you could collect 117 grand today, right? It's a lot of money. But think about what happens if this mania kicks off, and then you could sell it out. Like, there's a chance we're owning 1,000 shares, just selling covered calls. If this thing 3 or 4x's, could buy you an average sized home for cash in the United States. Like, if you don't understand how crazy that is.
So, hey,
right now, get out of this 17, 3x the price, and then go sell it deep out of the money. Your worst case is the stock more than doubles over that period of time, and you have to sell it at that doubled price, but you just took the premium and you went and bought a house free and clear in the US. Like, that's power using your assets. So it's important for people to spend time learning from people like Soleil and all these other guys out here. I mean, that's where I spent a lot of my time figuring this out. Is it's not a tool you want to use all the time because it makes you nervous, but there's times when you can really make that tool count. And that's one of them, right? If you can get yourself out from like mortgage debt, the burden of that for a lot of people, that's a huge sigh of relief. And buying 1,000 shares didn't cost you all that much a little while ago, right? So there's a scenario where this is one of the most important assets you're holding in your portfolio because of that optionality to go do things like just collect premium. And if it gets there and the price isn't more than doubled, you just keep the shares anyways. No harm, no foul. But you took the money and you bought a house or you bought a car or whatever. Like, there's ways to really improve your life. So, well, I know we get really bulled up on here and, we're never going to sell. We're going to fly it to the moon for 5 decades. I get it. I love it too. And I am deep in this for a while. I'm not doing any of the stuff I'm talking about right now. But when that time comes, you have to realize the power of holding the shares, right? Like, there is real strong power in that. So don't overlook it. Spend the time to learn. Don't just go run out and do it, right? Like, go watch a million of Soleil's videos, right? He's got tons of them. They're awesome.
268.
Yeah,
281.
281.
It took him almost a full year's worth of videos to come around to just being a long call buyer. But all the stuff he was doing on selling options was great. You're going to have to take my word for it. Don't listen to him now.
I'm having a freaking identity crisis because, like, before I was like, pretty conservative with it. I had 100% of my portfolio, had covered calls against it, a year ago. And I'm thinking, okay, 10%, maybe 20% leaps is a safe, quote unquote safe, because there's nothing safe in the stock market, but that was like a safe allocation for me, because if the leaps go to 0, I'm still in the game. You know what I mean? And now I'm at like I'm at like 60% leaps, and I only have I think maybe 4 covered calls on. I could sell 20, and I can't bring myself to do it.
You don't
I
dare
sold
to.
one.
No.
Yeah, I sold one today because I wasn't gonna do it because I was like, oh, okay, it's 370. I'm gonna sell one. You know what I mean? I'm like, I'm gonna capture all of this upside, and then just sell one. And by the time I got online, the price had dropped to like 350. I was like, I kind of missed the top, so I just won't do it. But I saw the repricing of the options, and I'm like, holy shit! I went to the top of the chain, and it was like what Grain said, because I'm looking at the prices, and the 720 strike was the same price as like the 500 strikes from 2 days ago. And I was like, okay, I just have to. IV rank on MicroStrategy was up to like 85 or something, and it can only go to 100. So I'm like, all right, I snatched one real quick. I just couldn't help myself.
So, hey, a quick point here. First of all, so I've not seen any of your videos. I should start doing that, or maybe I should just have a call with you. You can give me the simple part of this. So
I'll give you the TLDR.
Okay, go ahead.
No, I'm sorry. Yeah, no, I was just joking.
No,
I was just joking.
Okay, so look, I just posted this on Twitter. So guys, look, I'm terrible at this feed and how it works, but I posted Bitcoin 2020, and what happened in starting and you guys can see it in the feed there. It's easier to look at it. October 2020, Bitcoin opened at 11,000 and it went to 14,000, right? And then November, it went from 14,000 to 20,000. So basically, from the beginning of October to the height, and I just looked at the highs. Why do I care about the highs instead of the closing price? Is because as it runs up, especially if you have exposure to options, that rate of change that happens in the middle of the month or whatever it is what's going to cause this massive spike up in your options and what you do. And then what I'm seeing is that a disproportionate downside that I've seen so far. Now, obviously, some catastrophic event happens, and I'm down, whatever, 10 million in a day. But so be it. So my point is that what happened in 2020, which was an equivalent halving year, and you look at what happened over time, if somebody like, has this happened before? And the answer to that is yes. So in October, it went from 11,000 and a peak price in February to 57,000. So you got a 5.7x, let's just say it's a 5x or a 6x, doesn't matter. And that happened before. And then somebody's like, oh, well, we have diminishing returns, it's not going to happen again. And I'll say structurally, it's different. Why do I say that? Is because Eric Balkunas is talking about the money, I don't know, what was it, $5 billion flowed or $5 billion was traded on iBit. There's a gazillion dollars going into that. We did not have zero friction money flowing into the spot Bitcoin ETFs. It just did not exist back then. You had GBTC, which had a terrible reputation. And so there wasn't a lot of ways to do this. Now all the normies and people be like, give me $1 million worth of iBit and throw a little bit of MSTR in there for fun. And then you're seeing that happen. So do I think that the algorithms account for the structural differences between November of 2020 and going through to February versus where we are 4 years later? I'm like, no, I think that the eggheads that are working at these market makers, I think that they're just playing, oh, well, let's just see what happens in the market. I don't think that they realize, and maybe they're on this call listening to us, what can they do? And if they show, this is why I don't care that I say this if they're listening. If they ramp up those prices, it's a validation. If
they confirm.
Right, then they validate.
Thesis confirmed.
Thesis is confirmed. And if they don't do it, then they're caught in a quandary that how many people, I don't know, how many people have listened in right now in this call? 3,500?
6,000.
6,000 people. Well, if there's 6,000 people living, on this call, and 10% of us, 600 of us have a decent stack in an IRA account and go attack the long end. I'm not saying anybody to do that. I'm just saying for no financial advice. I think that the price might go up. And that's my premise. But you guys are more eloquent. I just think that the trend is your friend. I like buying into strength. I think that history doesn't repeat, but sometimes it rhymes. I think structurally it's different this time. Spot Bitcoin ETF, you got Sayward, 3.5 million followers. You've got the Google trend searches going up. Did I miss any? You got this MSTR moon tracker, which is awesome, telling us about triple Q, MSCI rebalance, November 5th expiration. Am I missing something, guys, here? You got
No,
Ben
'cause-
Workman talking 424s and S3s don't need it. Michael Saylor, $42 billion. Sovereign nation. The whole government shifted in America.
No, I think that's
We didn't-
exactly right. Because as soon as I saw the prices on the 700s, I was like, oh, they're scared. They think it's going to 700.
Yeah, and it changed
Yeah.
quick. Oh, like a day.
Right. And somebody just said global liquidity going up. And what happens if they cut interest rates? Because 30-year fixed rates went up because I was trying to buy a house. It was 6.25% 8 weeks ago. Now it's 7%. And actually, because I locked in, it was 7%. If I didn't, it would have been 7.25%. And somebody's like, dude, you got so much money. Why are you borrowing money for a house? It's because I don't want to take money out of the market. It's not that I can't afford to do it. I want to reduce my taxable events. So with that, they got to reduce the interest rates on the 30-year fix by however these guys, I love these bond guys. They're always talking about, oh, we're going to take care of the yield curve, inverted, this, that, and the other thing. Long-term, short-term. Jerome's an idiot. Jerome's a genius. I don't know what it is. If these guys in the bond markets were all smart, I would like to see them posting pictures of their Lambos and their Ferraris and their 50,000 square foot houses. But no, they sit there talking about these curves, and I'm like, I don't know if you guys actually know what you're talking about because you don't put your money behind your mouth. I think I'm done with my rant.
Attack the long end. Attack the long end.
I'm
Attack the
attacking
long
the
end.
long end.
Attack the long end. Call skew. Attack the long end.
Whenever grain gets
I think-
bullish,
I
you'll
think
buy on the
grain's-
long end of the tail. Yeah.
I think grain's like spot on because I think a lot of the algorithms run off like historical data and like similar volatility for different underlying equities and stuff. So if you build this like computer algorithm that's really good at like determining, okay, what should the options be priced at based on this sort of volatility, whatnot, but it can't price in. Yeah, it can't price in what you guys are saying. It's like, okay, well, like unique event that hasn't been foreseen. You can't price that in the options model, in the Jane Street options model. It doesn't work. So I think that's really why options have been so successful for us. It's like, okay, this is a one-time sort of stock drift that you can't, no historic model is be able to predict that, even the best computer algorithms. It's better for volatility. That's why I think buying those long-dated options was such a move. Like when you did it, Jeff, and when I started doing it, like the long-dated options allows for more non-historic data and volatility to take over, like bigger trends, bigger catalysts take over and influence those price movements. Whereas like the short-dated shit, like selling it, I think is a great way to do it. Buying the short-dated stuff is more of a gamble, right? The frequencies, the volatility, the algorithms will take over at that point. And so if we don't have the super high-end algorithms and trading equipment, so like maybe that's not our realm. And that's at least how I've approached it. It's like, okay, the shorter dated stuff, stay away being long that, but the longer dated stuff, okay, now we can use our brains, figure out where this is going, and then make more prudent decisions. So I think that's kind of, at least that's my theory.
Yeah, no, I was thinking about something very similar today because, you know, it's just another model being broken. Because if you think about anything that can happen, right, in the near term, you would think that would be more predictable. Yeah. The farther out in time should be less predictable. However, when it comes to MicroStrategy, I know damn well what's going to happen a year from now, but I don't know jack shit what the price is going to be next week. So it's completely flipped. I know I can, like, I have complete conviction that I can buy the top of the options chain for next December, and I will be in profit at some point over the next year. Like there's no doubt in my mind that I won't be able to find a point between now and then to sell at, I don't know, some multiple of what the frick yeah, exactly. But if I buy a call for this Friday, I don't know if he's going to go hard on the ATM. I don't know. Any kind of weird news might come out. I have no clue what's going to happen. And that's the complete opposite of everything else in life. And it kind of freaked me out a little bit. And so
it's interesting.
It made me think there's might be a premium attached to those short, expirations, which, I haven't looked at the numbers, but I suspect if there really is that much variation on the short term, maybe there is a premium that's added to those short calls that could be taken advantage of by an option seller. But that's completely hypothetical. Don't take that as gospel, but it's a possibility. It makes me think.
Hey, can I get a little controversial here?
Do it.
Yeah, so there was a comment that came up. Why isn't Gary Cardone on with us? Look, guys, I think Gary Cardone is an incredibly wealthy guy. I think his brother Grant Cardone is a legitimate billionaire. Why they spend 8 hours per day on these calls and you don't have something better to do with your time baffles me. Truly, I've been on calls with him. I've gone head to head with him. I don't think he understands MicroStrategy. Do I think that he's a wealthy guy and probably owns a lot of Bitcoin? He's watching the number go up? Sure. I think that we all probably figured that out years ago buy Bitcoin, hodl it, and watch it go up. I think that's buy and hold is a pretty simple strategy. What we're talking about in this call is how do we optimize MicroStrategy based upon what they do, which is a very, how should I say, complex or sophisticated type investments. And I don't think that Gary's that guy. I will jump on a call anytime with him, and I went head to head with him. He's like, oh, you need tax deductions. You need to depreciate your real estate. I'm like, why would I buy an asset that gives me a 5% cap return? Or let's say it's 10%. 10% in a year? I'm like, what are you kidding me? I made 10% on 700 strikes, which makes no sense. And which should make sense and goes up. He doesn't even understand what I just said there. So I don't get how he does. Oh, Green, we don't care about this drama BS. Back to MicroStrategy now. Look, I think that there are people on Twitter that will waste your time. And my pro tip to you is don't waste time if people aren't helping you to increase your portfolio. That's my tip.
Yeah, I hear you. I hear you. In thinking about these long dated options, and Dan, if you want to pull up your chart, I don't want to. Actually, is it still open? Is it on me? Do I need to share it? Do you want to walk through that table?
It was just the different open interests for different expiries. We can pull it up or not.
Gotcha.
Gotcha. We can just talk about it as well.
Yeah, I was just looking at the January 2026 720 calls. They're priced at $9,500 for a $720 call. So your break even stock price is $812. Is that right? $812.
Yeah.
Which is about a $200 billion market cap. If the price of Bitcoin goes to $500,000 and MicroStrategy has 400,000 Bitcoin by the end of 2025, the assets alone would be worth $200 billion, let alone any multiple, any frenzy, any craziness, any ETF inclusion, anything. So Neither, to your point, it's at some point, right? There's a high likelihood that those options are going to be in the money. And that's kind of getting to this asymmetric information component, Dan, that you're talking about. And you're so right. If you think about how the algorithms were designed, the algorithms from Jane Street and all these other companies that are designing these algos to make money and arb the design of the options market, they're doing it on equities that are like Tesla, $500 billion, $700 billion equity. They're doing it they're putting the most of their resource in the equities where they could make the most money, have the most liquidity. And so when you have a situation where you've got this $2 billion company that turns into a $70 billion company in a year, that catches the algorithms and people off guard. And they don't necessarily understand what's going on. And there are people that are on top of it for sure. I'm sure there are companies that know what they're doing here, but there are certainly other companies, algorithms, market makers that are behind the 8 ball for sure.
I think you're right. And I think another part of it is actually that so these guys are making a lot of money off the spread, right? They're essentially selling these long calls. They're short the stocks. So they have to go long the underlying equity to hedge out their position. And they're taking money on the spread when they sell you the call for the most part. And we're kind of betting that they're not fully hedged. But I think there's a large contingent of probably people out there selling us these calls that are just taking that crazy premium that Ben just talked about. I think a large part of people on the other side of this trade are institutions and retail and hedge funds that are psyched at maybe they, you know, hedge out their downside with some puts, and then they sell like a call, these calls to us. And they're like, well, if this call, you know, I'm going to make a 40% return here regardless. And I think for a lot of people that's exciting and what they want. So I think like, okay, maybe we're getting a yield or whatever, our expected value, our profit in this long call trade is just someone else capping their upside. In the same way, Saylor goes out and sells these convertible debts where their upside's capped, and he's taking the, you know, the long risky position that ultimately pays more. If that makes any sense.
Yeah, that makes sense. I mean, Chris or Neithu, what's your perspective?
Oh man, so I don't even know. Like I go in there and I'm like, I have 20 positions that I can sell covered calls against, and I can bring myself to sell one. Like I'm just an option buyer at this point with like one toe dipped into the option selling.
Yeah, what's the feedback when you talk about the option selling? Like, do you have a bunch of people in your comments that are aiming to do the same thing? I mean, what's your general pulse on people that are operating and doing what you're doing? Like, is there a lot of people that are doing it?
I have to like, you know, really just caution them. And I go back and I'm like, yes, okay, you can do this for yield. But then I go back to March and I'm like, I have to tell the story over and over again. I had MSTR was at 1,200. I sold the 1,400 strikes. That's like 15% out of the money in 1 week. And it went to 1,700. And I paid like 30 grand to roll a covered call. So
it's dangerous.
I said it the other day,
it's
but
dangerous.
like
It's tricky.
Yeah. I didn't even, you know, I had sold covered calls and cash secured puts for 4 years and never gave two shits whether my shares got called away, because I can just sell a cash secured put and get right back in. So it just never made a difference. I never really encountered a stock that had unlimited upside, like maybe something in pharmacy, FDA approval, you'll get like 100% in a day or something, but I'm not running option selling against those stocks anyway. So I never really even imagined that unlimited upside could exist until I said it the other day. And, you know, until I saw Quant Bros 1 and I'm like, holy crap, the unlimited upside that everybody's saying could possibly happen does actually exist, but in almost no stock except this one that I've ever really seen it to be a credible warning. So, you know, sometimes people reach out as like, oh, hey, I want to do this too. And I'm like, do you? Like, you have to really make, like, if you only have 100 shares and you sell a covered call in that 100 shares and they get called away and now you're out of the game, that can be just a gut-wrenching thing, right? Yeah. So after the stock split, you know, I mean, I have enough shares that if 1 or 200 shares get called away and I booked 20% profits on that, you know, it's fine. I still have unlimited upside in 70% of my account. So people just have to have reasonable expectations and do it for a reason. You want yield, do it for that reason. You know, like Ben said, if you have something that you need to do, you know, you need that money, you know, go for it. And I kind of feel like Saylor's doing it. Like he's accepting money from these bond investors. They're giving him money up front and he's selling them his shares, what, 30% out of the money at some point that they can convert. And then he's doing something good with the money. So if you can do something good with it, like I'm selling weeklies or I'm selling 45 days to expiration and I'm buying the ones that are 12 months out. So it's kind of like a calendar spread. It's a thing, but it's like I said, I don't know what's going to happen next week, but I know damn sure all of these long calls that I buy in December are going to be in the money. So
it's kind of crazy the mentality that I have, right? And we've talked through this now a couple of weeks when I'm looking at this options chain, and I go to the sell side and look like I go, what am I willing to sell any of these? And every chain I look at, like this week, next week, 2 weeks, 4 weeks, 45 days, 60 days, I look at it and I'm like, no,
You're taking a chance.
It's
Yeah,
dude,
exactly.
it's not. It's like it doesn't seem worth it.
It means you should buy.
But you know, that's what exactly, and that's the concept I've had is like, okay, if I'm still like mega uber long on this, and I think all of this is going to get blown out, I might as well buy that side of the trade and attack the tail.
Yeah, I almost have to, like, when I talk about selling covered calls with people, I almost have to just say, okay, pretend you're not a rabid MicroStrategy, irresponsibly long holder. And just let's imagine a different stock that's not called that. You know what I mean? Because I don't know that there's any other investment that you can instantly press a button and take your profits immediately. So if you buy 100 shares of something, right? And then you buy the 100 shares or you buy a long call and then you immediately sell it, you're going to get screwed on the bid ask going in and you're going to get screwed on the bid ask getting out. But if you buy 100 shares and you sell a covered call for next week or 45 days, you are immediately booking profits. You can take profits in 2 seconds. Someone is going to pay you for control of that valuable asset. So it just seems like a weird thing that there must be some way to take advantage of that because you're getting the money now. There could be some kind of time preference argument there where, low time preference, high time preference. But if you ask anybody, hey, it's like, hey, I'm going to give you $100. Do you want it today or do you want it next week? Well, I can sell a covered call and take my profits now. Just put the money in my hand now and I'll do something with it. Maybe I go longer, maybe I buy the Decembers with it. But it's just kind of a weird thing that you can literally just sell now. Someone's going to pay you and put money in your hand now for a potential that may or may not even happen in the future. So I agree with you. Every strike that I see, I'm like, it could cross it. And it really, if you're looking at the delta, you should fully expect to get wrecked on that strike. If you're selling a covered call, you should expect to get wrecked that percentage of the time. So even if you go out to
but that's the part I don't get. You see, look, I don't remember, like 6 years ago, I saw something that the best hedge funds did, like, there's a whole list of 20 of them. The top one did like 80% in year returns. And sure, it's probably on billions of dollars. And I get that they want to hedge that because it's a lot of money. But I did an 11x in 2017, and all I did was bought and held it, didn't do any options. I thought on my total portfolio, I got an 8x on my total portfolio in 2021, and I'm up 1,300% on MicroStrategy, and some of my options are up 1,500%. So if your gains by trying to get some form of yield is not exceeding the total gain by just buying a naked call, I think the math is kind of, I'm just not getting that math. Why do I care about, and the problem that I always have and every time I talk to the smartest wealth advisors, they're like, but you're not getting any yield and you have to sell your asset, which is causing you to get the gains. And I'm like, yeah, but if I make 1,300% in a year, do I care if I sell? Who cares? And they'll look at me, well, but your Sharpe ratio is out of whack. And I'm like, it's the same. And I'm like, I think that if I have a 1,300% gain and I sell off a tranche of that and I only have an 1,100% for the gain, I basically did 10x better than the best hedge funds. And in the last 2 cycles, well, in the first cycle when it became a lot of money, then for me, that's all I did. And so this yield stuff, I guess because what you said is when I sell something, the covered call, I get the yield up front based upon what's going to happen in the future. And I may or may not get called out. And I'm like, why don't you just right side the trade, buy it naked long? And if it goes down, then I just sell it before it goes to zero.
That's exactly what we're saying. Is like we're just saying the opposite side of it. Like we've reviewed the whole thing, and it's like it doesn't make sense. Like
well, I'll take the other side of the argument, right? I mean, a lot of it is you have to look at individual risk profiles.
Yeah, risk profile.
If I'm a hedge fund and I've collected $5 billion from a bunch of other wealthy people, like Grain, if you had all the money of everyone in your extended family, you wouldn't be all in calls because you do have a real scenario where they all expire worthless and you lose everything, right? There is a point where risk management does become prudent. right? We, when we're dealing with our individual capital, can take risks you can't take as an institutional trader, right? I mean, that's just the reality. They can't expose themselves to 100% downside. That's not real.
That's totally true. But if somebody's account is 100, everybody's account is 100%. So what I'm saying by risk management is if I take 10% naked calls on it to the upside, 90% is not in it.
Sure. Oh yeah.
10%.
Sure.
But
not with the concentration risk. That's what they'd have to fight with. Right?
I understand. So there's 10%.
Not everyone's as deep in this trade as we are.
Of course. But if you do 10%, the catch is that it's been growing so fast over the past 8 weeks since 10 weeks since I've been doing this, is that it went from, let's say, 5 or 10% of my account to over 50%, because what it did was the rate of change was so strong in the options. So that's the part where, did I initially start off at 10% or 5%? Yes. But then it consumed more than 50% of the account because it shot way up. And so, but then they became so deep in the money for the 250s and 200s. Now, Jeff, it's not like yours where I bought them at like 13 cents, right? But what happened is that I got the 250s that are really deep in the 200 strikes that are deep in the money. So, and then I have the long dated ones. So I think that what happened is, yes, with risk management, would I do this for other people? Absolutely not. Would I start with 5%, and when it goes to 20%, would I sell it all off? No, I might sell off 5 or, knock it down by, 25% of the 30% that it got to. So I think that's what I'm trying to say. Sense. Yeah, I'm not saying that anyone.
That makes sense. I had a point there.
I mean, you do have to acknowledge the downside of the volatility too, right? So if we're just talking institutions, not personal investors, you have quarterly reports you got to put out to these people. And if you catch a quarterly downtrend on this, where you were overexposed in options and you didn't trim it, right, your fund looks like garbage. You're going to have people pulling their capital and going somewhere else, right? Because they're not going to understand that long-term component of this that you understand, right?
Sure.
So you've been old for a long time, and you're buying things that are stacked at different expirations, right? It's a little different world in the institutional space.
I get that, but one of the weirdest part about finance that I've seen from a lot of Series 7, 63 people is that they're barred from buying any of this. So it's like they have zero skin in the game, and they're not particularly good at it because they use typically, if it's Merrill Lynch or Fidelity or whatever it is, they use these predetermined packages for wealth management. So they don't get really good at investing for big returns. So they're pretty terrible at it. And then you find out that if you work at a hedge fund and that person can't do those trades on their own because they're barred from doing that, then how good are they at it? So then it ends up being a group of retail traders that is better than the hedge funds or long asset managers, because they can't do it because, like you just said, Ben, if they have a bad quarterly report, people are like, oh, I'm going to take all my money out because these guys, they saw the volatility.
Yep.
And that's why
traditional wealth managers, this breaks their minds, right? Like what we're doing right now is a very strange thing to the traditional wealth management world. And it does become a problem, right? Because I know you've had people talk to you and I've had people talk to me where, kind of your benchmark rate is you're going, well, how do you perform compared to how I've performed over the last couple of years? And if you can't show me a reason to move my money to you, right now I'm not. But everyone's in different phases of life. And I try to take that into account, right? It's like my dad, he's a financial advisor. So I'm very familiar with that world. And there's a lot of people, hence the reason why, we've only got a few thousand people that are paying any attention to what's going on over here with MicroStrategy. You've got a lot of other people that can't risk the base, right? And I make a point of saying that a lot, that even in my personal life, I've got a very boring component to some of my portfolio because I worked really hard to build up a strong base, and I'll never risk the base, right? And that might be things like spot Bitcoin, right? Things like that. But you get to a certain point where you lock in the stability of your life from your financial picture, and you go, I've made it now. I'm not going to risk and unmake it on maybe I just catch the volatility for the wrong 3 months, right? Like if I had options that were 3 months out and I was so sure they were going to hit, and all of a sudden I'm down 40%, that's devastating, because for a lot of people, they can't make that trade back. And when you take a loss like that, for most people who don't have a real cushion, that they can work with, right? If they're not investing from a position of strength, that might take them out of the game. And if it takes you out of the game, that's a total loss. You're not getting it back, right? We're all, we're part gamblers, but we also do a lot of research here to make sure we understand the thesis we're investing in. So we'll stay in the game knowing that volatility is the whole product we're investing in. We know there's going to be downs and we're going to get smashed for weeks on end. It's happened before, it'll happen again. We know that. For some people that are just showing up, right? The people that Jeff shouted out at the beginning of his stream on the MicroStrategy tourists, they don't get that yet. And so they might take one of these hits if they get greedy and they jump into options at the wrong time, right after this really strong uptrend, where they might not understand and they buy Decembers and they get smashed, and there's personal accountability for them 100%. But that can be total life-changing losses. And so I always try to be a little careful because I don't want to push. There's a reason I don't share any of my personal trades. I love that you guys do it because I think it's great information for people. But I take a very balanced approach in my own personal investing as well, where I make sure that I'm never risking my base. If I take a total loss on my MicroStrategy trade, it's not going to change the way I have to live one single bit. And you got to make sure you're investing from that position of strength. And then if you have incremental capital above that position of strength, whatever that threshold is for you, and you want to go for it, right? Multiply it, see what you can do. That's the fun part. But I think you have to be in a position of strength first to do it. And I think even you got there, right? I mean, you spent a long time building up the capital to be able to do what it is you're doing. And I think that's a message people need to hear too. They're seeing the good part of this, where everyone's making money. They didn't see the decades of work that went into building that base that enabled us to take these types of risks.
Yeah, Ben. So that's great. And by the way, I want to make a comment. I'm reading all the comments as they scroll through. Look, I get that these other guys, well, most of them use their real names on here. I stopped doing that because I was sim swapped 3 times. Okay, and then they went after the Coinbase account. They didn't get anything because I used the appropriate authenticator to block that from happening. So yes, I do use an avatar. And by the way, I have posted a lot of personal information, personal portfolios very specifically about what I've done. So if somebody thinks that I am not sharing enough, what I would say to them is, that's cool. You post what you have done. Just rank your trades, post it to Twitter. And if your numbers are better than mine, congratulations. I will be the first person to congratulate you. If your trade's like some guy that just said, oh, I like Tesla and I'm up 70% for the year, and I wrote back, congratulations to you. You did really good for a traditional finance guy. Totally get it. But my trades, I've already made 11x on MicroStrategy. And you know what I did with it? As Ben said, I bought it and I held it for 2 years. I didn't do any options at all, well, until this year, thinking that the FASB would happen, and then I lost 250 grand on it. So if somebody thinks that I am not giving enough information about what I'm doing, that's no problem. I will continue doing it. But on the flip side, they need to go do that themselves.
Yeah. And I think it's inspiring for people to see it, right? Because what you're showing is really the result of what you can do when you're investing from a position of strength, right? When you can swing big without that downside risk. Like if you lose this money, you're not going to be homeless, right? It's not going to really impact your life. I mean, it's going to hurt. It's going to hurt.
Of course, it's going to hurt.
But it's not going to sink you down to the bottom, right? And I think that's important, right? So having people like you out there that are showing those types of trades and showing what's possible, I mean, that's inspirational. And I think people need to understand that, but they need to understand that there's a build-up period to that. Like you had a career, you worked your tail off for a long time to build the capital. You had losses, you had wins, and then you started pressing the trade when you got to that position of strength. And people need to really consider when they see these things, are they getting too euphoric because they see everyone else making money on autopilot? And keep in mind, 4 months ago, we all looked like idiots for a little bit.
People thought we were idiots, right? Yeah, people thought we were idiots. No doubt about it.
We looked like, and we were getting smashed. I mean, I was. I'm sure the rest of you guys were.
Yeah.
But we're in the good times right now, and we are in front of us, which helps.
Sure, and I am gloating. I get that also. But the one thing that I do consistently hear, even as late as 3 days ago, a friend of mine had done some investing and this guy did really, really well. And the wealth manager, and the person was taking the money out of the account, and the wealth manager was like, this could go to zero tomorrow. And I was like, zero in one day? I think that the market starts going down. I think that might want to resize my position and sell it. I'm capable of doing that. I don't think it's going to go to zero but people still say this as late as Friday of last week. This Bitcoin thing, I've been hearing that now for 7 years. Bitcoin can go to zero tomorrow. You wake up in the morning, all your money is gone. And I'm like, really? I just don't think that's possible right now for it to go to zero. But I could be wrong.
Yeah, but you gotta evaluate the downsides.
There's probabilities.
I'm with you, right? I
There's
look at all the good catalysts, and I'm going, we're just getting to the part where we finally have a tailwind. Like, we've had a headwind in this space for so long. All the regulations were against us. You had the politicians pushing against us for years, right? Everything was, and we finally just caught a tailwind. And I'm starting to hear people going, maybe I should trim. And I'm going, not me. No way. You're not going to make me jump out right when I'm finally catching the wind in the right direction. But I just make that point to go, listen, look at all the gains you've been seeing from everyone in the last 2 months. It's been amazing. And now, even if you're investing at a small dollar amount, there's some really meaningful catalysts coming up here that can really change your picture. But I would always say it's not worth risking your stability, your mental stability. That's a big one, right? I mean, I've had
that's worth more.
Left, right, and sideways, and I'm going, oh my, what am I doing? I mean, but that's what pushes me to do all the research, right? Like, I have to know if I'm going to go as big as I've been going with a MicroStrategy. You have to spend the time to know exactly what you're getting into, down to the details, right? You've got to try to prove yourself wrong 100 times. Go into every possible scenario you can think of. I like to talk about the good ones. I've run through a lot of bad ones. I just can't come up with any of them that invalidate the strategy here. So I have confidence that even if I catch a downtrend in the volatility cycle here, it's fine, because I know what's going on. I know what the underlying asset is. I believe deeply in the underlying asset. I've been studying that for years and years and years. So that one I believe in. So I'm comfortable holding through those rough periods. But for people that jump in like today and they're finding it because it showed up on the news, they've got to be a little careful, because greed kicks in fast. And those people probably aren't listening to this call, but greed kicks in fast, and it's the quickest way to run it down to zero. If you go, everyone else is making money in options, I'm going to buy some. But if you haven't watched, 280 episodes of Soleil making money and getting smashed and trying to figure out how to dig out of that hole, and oh my gosh, what did I do? Like, if you haven't done that research, just buy the shares, because with the shares, you've got time on your side. You can ride that cycle. Yeah. It's fine. It can go down. It'll come back up. You own the same number of shares. When it gets back up to that price, you're back to whole again. Options are trickier. And that's why, like you said, Grain, maybe it's 5% that you're allocating to it. Maybe it's 10% you're allocating to it. Manage that leverage percentage for yourself the same way Saylor's managing the leverage percentage that he's taking on debt on the Bitcoin. And if you're doing that from a position of strength, by all means, try to get the upside, because there's a lot of good things that have been happening. Not financial advice. There's a lot of good things that have been happening out here. We've shared our thesis. People are developing their own, which is great to see. And it makes this one of the most compelling areas to invest in that you can find right now. It's so unique.
I've been seeing tweets that say, I'm an options noob, never had done options before. Which strike should I get? It's like,
I'm not responding.
You're not ready.
Yeah.
Yeah. Hey, folks. Look, I'm going to drop off. It's been an hour and 40 minutes. I really appreciate these calls. And look, again, results are what matter. The most important thing is look at your account. If the number is green and continues to go up, that's your positive feedback loop. Continue doing it. And over time, you're going to see if it works and if it doesn't. And the best way to do it is to see how successful you are over 3, 4, 5, 6 months. This is a bull market, so a lot of people will feel pretty confident. And I've said before, when you make life-changing money, I take off 20%. I pay taxes. I go to sleep at night, take care of myself, take care of family, take care of friends, and I do that. And I can do that now from a position of strength. And that's why I'm able to take these, take these risks, right? But for me, because I've taken care of all the simple stuff in life, which is very difficult for other people, house, cars, debt, and so forth, I can take those risks. I do not, in my view, for me, looking at, I believe in Michael Saylor, I believe in Bitcoin, what's happened over the years. So for me, I don't think that is particularly risky. I think it is very volatile. And that's something that you have to learn to deal with and do that. Mental fortitude. But with that saying, thank you so much, guys. Ben, thank you for costing me a few $1 million in the next few days. So I think that it's all for the upside. And you guys have a great night. Take care.
Attack the tail, Grain.
Appreciate it, Grid.
Attack the tail.
man.
Yep. Bye.
See you, Grain. Thanks for everything.
All right, someone else get bullish. I've been dragging this into a bear space hard. So you guys need to get back after it now.
No, I think it's like reasonable. We got to talk both sides of the thing, because Grain's definitely one extreme, and it's awesome, and I think that's what people want to hear. But yeah, it's the same for me. I hold spot Bitcoin as the way I do it is I think, okay, 2 cycles, 8 years. Will my Bitcoin cover all my losses if MSTR goes to 0? That's how I look at it. Yeah. Will I be a sucker? And will I have lost a lot? Yeah, it'd be a complete disaster. But like, I'll be all right. And so that's the way I do it.
And if your MSTR goes to 0, if it did, then likely something happened to Bitcoin.
It took me a long time to get there. It took me a long time to get there, but now that's what I'm thinking. But it took me a long time to get there.
If something probably happened to Bitcoin, and if that's the case, then you're going to be working anyway. Like, you're going to be working for some sort of dollars anyway somewhere else. And it's like, all right, well, but Ben, you make a really good point. And somebody gave me that. Yeah, go ahead, Dan.
Yeah, Ben, I think your point about time was so critical, because like, time is the game here, and it also brings in the idea of like opportunity cost. So like, age matters a lot, also time horizon, but options are effectively limiting your time for upside, and that's like a really scary and dangerous thing when you're looking at something that has potentially unlimited upside in the long run. So you're taking on risk for something that isn't risky, and you don't know how much you're losing. That's the other thing I think about a lot too, is like, you don't know how much you're losing if one of these options goes to 0. Like, let's say you spend 10 grand on a heinous option that expires in a week or 2, and then you lose it, right? What did you actually lose? Did you lose 10 grand, or did you lose,
10%,
$1 million, 100x that in 20 years on MSTR stock? So it's something to think about.
Yeah, that's why you limit the amount that you're doing in that space, right? You got to control it at a certain point, because like we talked about earlier, right? And I think that's why I brought that up, is because I think it's good for people to hear how you can utilize the actual shares themselves later on, right? You can still achieve huge success. Like, let's just be very clear that the returns we're seeing are so abnormal compared to the entire rest of the stock market that it's become like, if it's not up 20% in a week, we're getting bored, right? I mean, it's crazy to think that way, but that's where we're at. But the power in owning the shares is you've still got flexibility down the line. Right? You've got the ability, if you have to access capital, to go sell covered calls, not lose your shares, not lose a whole bunch of upside. Yeah. You have that flexibility if you own the asset itself. And you have that time where if you get a certain period of time where there's a black swan event and all the options get crushed, which can absolutely happen, right? Yeah. Then you've got the time to just sit and wait and recover, right? It can bounce back from there, and it usually has. So I think that's just a good message that people need to hear while we're going down the bull path, because I think at the beginning of this, I might have got people too bullish with that. But I like that side of it too, because I think that's real. Yeah. But I do always just want to make sure that, we got a lot of people collectively following the group of us. It freaks me out quite a bit how many people listen to us live on here and are passing my posts.
It's just a club. Don't worry about everybody else.
God, it's just it starts whacking me out pretty quick, because like 3 months ago I had like 4,000 people maybe follow. It blows my mind still that people care what I'm saying at all. But because of that, you feel a little responsibility to give the other side going, get involved, but just make sure you're doing it, from that position of strength, right? I mean, this is one of those areas where if you own Bitcoin already, and you own spot MicroStrategy already, and you've got those hard assets that have that huge upside, and like, I don't even think about my Bitcoin anymore. Yeah. Like, I forget to ever look at that. It's just been there for so long now that you just let it sit. And it's like the most peaceful part of my investing life. I don't even have to worry about it, because I'm pretty confident in the direction that's going. And then you move over, and then you take that, once you learn about options, you take those bigger swings. And those are the chances to make a lot of money, but you're going to strike out a lot doing it. It just happens.
Yeah. And
so giving yourself time is important. Don't go short strikes, particularly if you don't know what you're doing. Give yourself time. Let the market be able to work. Give yourself that ability where you could get out if you needed to, or, you know, you just give the market more time to work in your favor, right? I think those are important components to options investing that people miss. And you see people get wrecked every cycle because they jump in when everyone's euphoric.
Well, I mean, that's how people got absolutely destroyed in the GameStop trade too, right? Like everybody was buying in, and they were buying shit that they had no idea what it was, right? Like they were buying shares and options because that's what everybody else was doing, and Roaring Kitty was out there posting all his gains, right? Like that. And there was one person, and everybody was like, oh, if he's doing it, I'm going to do it, and I'm going to follow this, and, you know, stick it to the man. And they got to, and there were so many people in that trade that had no idea what they were doing. And now, because of that, they're never going to touch stocks again. And Ben, I understand your hesitation, because we're in a very similar type situation here, right? Where there's concern that if people listen to us all bulled up, that everybody's buying these options and going crazy, and then realize like, wait, there's 100% downside in buying options. Holy shit. And they don't understand like the fundamentals. And this is getting back to a point that I was going to say earlier, is that some of the best advice I was given is run your life like a business. Like your life is a business. Your financial account, like your finances, your income, everybody's got their own business. Their whole family is a business, right? Like Neithu, you got a business. Danny, you got a business. Ben, you've got a business. And the reason we're all on this call is because the businesses that we're running are inspiring, in their different shapes and different formats, but they're all correlated, going in a very similar direction. But it's important to have risk management and how you think about your personal financial business, your family's business, and taking those risk management considerations very seriously. Because if your business goes bankrupt, you got to start over.
Right? And you're gonna have to tell your wife, right?
You're gonna have to tell your wife. That's
don't
that's one of the...
that ridge. You don't want that in your life. I promise.
Yeah,
you're not gonna want that. So yeah. I mean, that's all real. So, anyways, I think that's a good area that we covered. So now we can get back to some of the bull topics.
Let's bull it
if we
up.
Want to.
Let's bull it
up.
So
one of the things I saw people asking was, Jeff Park put out that post that was showing whatever it was, 2 million shares or 1.9 million shares or whatever it was.
I thought we were getting
transferring. And what that was, most likely what it is, right? There's no way for any of us to confirm it, right? Even Jeff, he can see it on his Bloomberg terminal, but it doesn't tell you what the transaction is. My best guess is that that's the 2030 notes converting. And that would only be a partial conversion because there's like 5 million shares associated with it. So I think people will be watching pretty closely for more block trades. But you see those types of block trades, and particularly in those clean numbers like that, when they're essentially doing giant share transactions, usually to institutional firms. That's when you're going to see block trades occurring. So MicroStrategy has to settle and deliver the shares to whoever it is that converted the bonds, if that's what's happening right now. But because most of those are hedge funds, and a lot of them own in very large size, those would come across in those types of block trades. So that's what it looks like it's doing. And the reason I say it's probably the 2030s, which only became eligible 2 days ago, is that the 2027s have a little bit of nuance to them, because there's this cat and game mouse between MicroStrategy and the bondholders right now. Because if MicroStrategy calls for cash redemption, which they can do now because they also got the benefit of the 130% clause because they were beyond the no-call period that expired in February of this year. If MicroStrategy calls for the conversion, or cash redemption is actually what they can call for. So if they call for a cash redemption and the bondholders say, we want to convert, because MicroStrategy called them early, there's a table in all the indentures that actually they call it a make-whole provision. I called it a riser, but they call it a make-whole provision, where it scales up the number of shares they receive beyond what was communicated in the early press release, right? What the shares they communicate in the press release, assumes conversion at the end, at maturity. And so if they decided to call those bonds and get them to basically force them to convert, because no one's going to take cash because of the value of the equity right now, they would owe them like another 0.253 shares per $1,000 they held. So it's actually like a 3.6% increase in the number of shares that they would get. So there's a little bit of a game on those notes in particular, because while the bondholders have the ability to convert early right now, if they choose to convert, they just get the standard number of shares. But if MicroStrategy forces them into converting, they get more shares. And because it's a small time period, I can see them holding on to it, trying to push, if MicroStrategy wants that space on the balance sheet, pushing them into converting. Now, there's a point where, like, if the price gets back up above 350, it lowers the amount of additional shares MicroStrategy has to give. So there's definitely a cost benefit on, you know, how much can they increase, you know, Bitcoin per share if they go issue a replacement convert today, if they just force that conversion. Like, even if they issue the additional shares, we're never going to see the impact in Bitcoin per share, because with the ATM usage and new converts coming out, there will be enough incremental to Bitcoin per share. You're never going to see it. You're not going to feel it. But it's a game, right? So that's kind of what you're looking at there, which is why I say I don't think it's the 2027s. Because if I was holding the 2027s and we were this close, I would probably wait out and see if MicroStrategy was going to force that conversion first, take my additional shares. If I'm already hedged out, I don't have equity risk. As long as my margin costs aren't insane to hold the hedge for another month or two, I'd try to get those additional shares. So, but the 2030s, because MicroStrategy can't force a conversion, those would make more sense to me, that they might be the ones converting. So that's kind of the point there. And then one last thing, and then I'll let someone else jump in here, is there's been all kinds of talk out there on the internet about how, like, the price today was diving because these bonds were converting. But that's not real, guys. Like, these bonds, the minute these guys get these bonds, they basically go 70% short, right? These bonds have been coming out with like a 70 delta. And so they're shorting immediately 70% of those shares that are associated with that call option. By the time they decide they're going to convert, they're going to lock in their performance, right? And so what they're going to do is they're going to go and hedge out 100% of that equity risk. So that means that these big hedge funds are now holding essentially 100% short position against that call option. So when they get the shares delivered to them, online I use the reference a lot, saying basically they've got to sell one share, buy one share. That's not really how it's going to happen. What's going to happen is those shares are going to get delivered to their broker, and they're going to call them and they're going to say, settle this, net these together, net out my short exposure, right? It takes care of my short position. Now my short position's closed out. I didn't have to go sell any shares in the market. So these conversions are not market impacting. So all the speculation that's going on about the price diving today because these shares were getting sold, that's not real, right? Most of the people getting these bonds, probably 80% of them, are convertible arbitrageurs that are taking these short positions. So just keep that in mind when you're looking at it, right? Is that you've got to understand those mechanics. Everyone's trying to create a narrative to make sense of price action on any given day. We're never going to know. We'll never know.
We'll never know.
There's going to be some ATM, but the ATM is probably going to be small. It might be 2% of daily volume. Maybe it's 5% if it's really high. Like, it's enough to dampen some of the effect, but it's not enough to control it. And so you're just looking at how individuals are acting, individual institutions. We've been on a rip, so some people are taking profits. Like, don't spend too much time trying to figure out what's happening on any given day. Nobody's going to know. I'm not going to know. Jeff Park's not going to know. Hunter Jeff's not going to know. Dan's not, like, we're just not going to know, right?
No.
But what I do know is it's not all driven by the convertible bonds. That I do know, right? That much I can make sense of. And some of those bondholders are long only. There is a small component of them, of those buyers, that aren't hedging because they're not convertible arb. They're not trying to make money that way. Some people, like family offices and things that are buying them, do just want to be long. They just want the call option, and they might keep the shares if they get them. So there is a mix of people, but just to try to put some
and that mix might change over time, right? Like, if we're talking $21 billion of Yeah, if the convertible ARB disk, yeah, go ahead.
I was going to say,
everybody be long.
Want,
Everybody's long. Just everybody should just go long.
Well, exactly, right. I kind of view it as if they're going to really scale up the convertible bond offerings, my view is that you can kind of get yourself into a little bit of a scenario where selling those converts at scale can actually start dampening price impact, which dampens volatility on the shares. If you have such a big
say that one more time. I'm sorry. Say that one more time.
So if they're selling a huge amount of these converts, right?
Yeah.
So if you go look at the short interest right now, I would bet 70+% of that short interest is tied to the convertible bonds, right?
Yeah.
There's very little organic short interest. So everyone waiting for a short squeeze here, it's not coming, guys.
It's not happening.
Just be maybe a small one, but nothing of significance. So if they're selling all these bonds to convertible ARB desks, that means all of these guys are taking short positions. So what that'll do is as the price climbs, they'll increase their short positions. So they're selling into the market as price climbs. So that can dampen the upside of a move. What they also help with doing is when the price starts rocketing down and it gets below where they took those short positions, they'll start taking off those short positions. They'll start buying them back. That's that arbitrage that they're doing, basically looking at the price of the shares moving more than the bond because the bond has that floor, it has that synthetic put option. So they'll dampen the downside. But the problem with that, it sounds great in theory, but the problem with that is that the product here is volatility. You want the upsides, you want the downsides. That's what gives this thing the volatility that everyone craves. So if you could shift that mix of buyers in these bonds to be 50-50, where 50% of the people are just buying these because they want to be long MicroStrategy, but they want the floor. They're not delta hedging. They're not taking on short positions and things like that. They just want that call option to pay off big, and they want the shares at the end. And those people aren't going to do any of that volatility dampening. So if we all of a sudden end up in a position where we have 10 or 20 billion dollars of convertible debt out there with, who knows how many millions of shares tied to them, right? It can cause a little bit of an impact. And so that's what I look at. And I kind of go, I want no convertible ARB guys buying these bonds. I want you to go, I don't care if schools want to buy them. I want people that are long, right? Like that's it. Sell them to me. I want to be long. And so if they can do that, I think that actually holds the volatility up. Good thing we have going for us is as these early ones convert, the next ones that come out will have less shares associated with them. So the short positions they're taking will be smaller. So it does start to get better, but the scale's expanding. So you kind of stay in a sweet spot, and I haven't done fully the math on exactly what that looks like, but that's the general concept of it. So I would like to see that mix change, but there's so much demand that I'm not sure it's going to, because the speed they can get them out to the ARB guys is very fast. I don't think they have any problem moving them.
Yeah. And to that point, I think that may explain, again, we're never going to know, but that may explain why some days MicroStrategy's up and Bitcoin's down. And you're like, wait, hold on, what's happening here? Well, there are other players that are taking advantage of this relative pressure in the system and taking advantage and closing out positions, which is it's an interesting perspective. Yeah. Man,
it's a thought. Doesn't mean it's right, but that's
it's a thought. Yeah, I mean, it's there.
Do you think he's like lobbying? Do you think he's targeting people or targeting firms, in talks with firms to just get these long buyers? Do you think it's something he's actively trying to do, or is he kind of like, oh, like if that happens, like there's less mean reversion sort of behavior?
Yeah, I don't think so. They're all private placement, right? So, I mean, these aren't going out to bid and just anyone can buy them. But the relationships are going to be there with these massive hedge funds, because they need to go and call people that can give them $200 million tomorrow, right? They don't give a lot of advance warning on these convertible bonds from when they decide to issue them to when they close them. So that money's there waiting. So a lot of this so far, I think, has been very relationship driven. So you get some of these guys, these Linden and Whitebox and these big ARB shops that are coming in and buying a bunch of these. And if they early convert, I would bet there's conversations around that with MicroStrategy trying to play the relationship angle going, hey, if you'll convert early, we'll make sure that you're in the next round, right? So you've got a guaranteed spot to redeploy your capital. I'm sure that there's a component of that that's going on right now. But as they do more and more, like they might be able to limit that and say, hey, you know, this shop that's been buying 200 million from us, we'll keep selling you 200 million, but that's going to start becoming a smaller and smaller portion of the overall size of these converts. So we might not cut down the size you can get, but we might not expand it. And we might try to bring in new people who want to be more long only, right? Like Jeff says, these insurance companies or any of these other family offices, these different institutions, right? I could see them trying to bring that more in the mix. And they might even open these offerings up where, you know, you or I could get a hold of these things, right? They're not doing that right now because there's more filings and paperwork you have to do. So it slows down the speed of getting these things executed. But eventually I could see them doing that, particularly if they want to really get better terms on these. I think then you could see them start doing that a little more, but not yet, right? Right now, I think it's relationship based, and I think you're going to see a lot of the same names showing up over and over that recycle. Like I'd take a screenshot of the 13Fs that are coming out right now for the holders of the ones that are eligible to convert, so that when they do a new one and a new 13F, I'd be curious to see what size matches up with the ones that hold them today to see if they got the same allocation.
Yeah. Yeah, it will be interesting. I mean, these pools of capitals are enormous. So, and I'm sure they're going to get more and more popular. I mean, we'll see what Saylor says on CNBC tomorrow. I'm raising $21 billion. Who would like to buy Bitcoin-backed bonds? Give me a ring. I am available. I am selling this. It has outperformed every single investment you could possibly buy in the entire market. So,
to our point on options earlier, right? I mean, if they were selling me bonds, I'd buy them.
You buy them. Yeah.
It takes out that downside. I don't have a 0% loss now, right? They're so over collateralized. And if I think Bitcoin's going to be remotely successful,
right,
then you believe that that floor is good. So why wouldn't I take that call option with a floor? I'd take it.
100%. Yeah. And it's safer than the equity too, technically. Yeah. I mean, it's crazy. All right. Well, we're at 2 hours here. Well, I appreciate the time, everybody. We should probably wrap it up. Hard stop at 2 hours. We got to, I know a lot of people would like us to talk all night, but we can't do it. We got to actually do some research and talk to these capital folks and make the world go round. So appreciate the time. We'll be back same time next week, Wednesday, and it will be, the week before Thanksgiving, and we'll figure it out and we'll see where we go. So enjoy the volatility over the next couple of days. Thank you to everybody that's watched. To all of the people that are new to MicroStrategy or Bitcoin, Godspeed, welcome. It's the weather's nice. Enjoy the volatility. So yeah, thanks everyone. Appreciate the time.
Thanks, Jeff. Be good, Joel.
Thanks, guys. Bye.